The RBA governor says the central bank will do whatever is necessary to bring down inflation, just hours after the board voted to raise interest rates for the 7th straight month. The cash rate now sits at 2.85% after a quarter of a percentage point hike, with at least one of the big banks already moving to pass it straight on to borrowers.
Philip Lowe says allowing what he calls the evil of inflation to persist would increase the risk of recession, lead to higher unemployment and force them to take even more dramatic action. Mads is across all the details this morning. Gosh, we heard the announcement yesterday, but what else might be ahead? That's
exactly.
A big question mark as well.
It wasn't unexpected, but it doesn't mean that it doesn't hurt. And so this is the highest cash rate that we've seen since 2013. There will be a whole generation, 9 years worth of borrowers who have never seen a cash rate at this level. And it is the speed which has been really most breathtaking. So the cash rate was at 0.1% back in May. Here we are 6 months later at 2.85%. And this is how that's going to filter down to people with a 25-year mortgage. There you can see at $750,000 worth of borrowing, which is what many people have had to borrow thanks to those huge home price increases over the last couple of years. Borrowers are now looking at having to find an extra $1,140 per month to service their mortgage. That is a huge amount of money in what is already a high inflation environment. We've been speaking to Sally Tyndall, who is from Rate City, and she says just because the rates are high, it doesn't mean you have to stick with your bank. She is urging people to shop around.
Borrowers do not need to take these variable rate hikes lying down. The average customer, after this rate hike filters through, they're paying about 5.61%. However, we expect there's still going to be at least a handful of lenders offering rates under 4.5%. That's a huge difference, over a percent difference.
Yeah, big stresses and strains on so many families, but Philip Lowe was making it very clear the RBA will continue those rate rises.
They will, because of what he called the evils of inflation. And a new prediction we got from the RBA yesterday, Michael and Lisa, about inflation. 8% is now what the RBA is pegging it's going to be at by the end of the year. In the budget last week, they were saying 7.75%. An extra little bit, and the RBA now thinks that next year it's still going to be at 4.75%. Now, the whole reason that the bank is increasing rates so rapidly is it is trying to put that inflation genie back in the bottle. And speaking at a dinner in Hobart after that bank's interest rate decision, Reserve Bank Governor Philip Lowe said, well, he is certainly open to even more hikes.
We're not on a preset path here, though. If we need to step up to larger increases again to secure a return of inflation to target, we will do that. Similarly, if the situation requires us to hold steady from now, we will do that as well. Given the uncertainties around the outlook, we'll be watching very carefully how the economy and inflation pressures evolve over the summer.
So National Australia Bank is the only of the big four to have passed that on already. It's expected the others will fall in line. No one has changed anything to their savings rates yet. Philip Lowe was very keen in that speech to point out that he is aware of the pressures on families. He talked about rising petrol prices, the cost of groceries as well. Another person who is very keen to show that he is aware of the huge strain that Australians are under is the Prime Minister Anthony Albanese. Now, as a feature of that budget last week, there was not the cash splashes that we have had of previous years. So the Prime Minister is very much defending that. After we've seen some polls which are showing Australians are pretty underwhelmed by the budget, he'll give a speech today where he says that he understands that there are many people feeling the pain of rising prices, but he will say that a cash splash is cheap politics and hugely expensive economics that will only add to the inflationary pressures. So he's not going to be changing his position, very much on the defensive mode.
Yeah, it's a position he took after the budget, the morning after, with us here on News Breakfast, and he is clearly, after a week, deciding that is still the approach. Thank you, Mads.
Thanks.